everybody, it's Jane Johnston with the Briar Hill Group at RE/MAX Camosun, host of Vancouver Island Time. I'm here on He Said, She Said, They Said with...
Hey everybody, it's Andrew from LePage, and good to be here yet again.
And we are going to be talking about real estate in Victoria. So I was thinking we should call it, I had this brainwave, a real debate on real estate.
It's heavy hitting. Sounds heavy hitting. Yeah.
And I'm just wondering if our viewers want to chime in. I'm thinking that maybe we should change our format and have regular mortgage updates and regular lawyer updates. What do you think?
Are you asking for comments or are you asking me? We can debate this later, you know.
I just think that it would help because I think a lot of things are going to be changing. Anyway, something to think about.
Okay.
Chime in.
Okay. So, I mean, generally what we do here is we get through the stats and then we just converse and often debate. So, yeah, we can do this.
Okay. Awesome. All right. So we're going to talk about our stats today. Let me just bring them in. Whoops. Somehow I do not have you in here. There we go. All right. So what's happening with real estate in Victoria? Have you got the big screen?
I'm seeing our faces and it's showing, you know, the window of your PowerPoint or whatever. Like it's the full on window. We're not detailed. Okay. Now we've got some details. It's still showing the side slides.
Okay. What's going on here?
Folks, you know, we will work this out eventually. Maybe by next year, we'll have all of our technical difficulties sorted.
What are you seeing now?
I am seeing still your side slides as well as the slide for the month to date. So it's doable, but it's not large enough.
I see what the problem is. Okay, well, we're going to do it this way.
Great.
Okay. Oh, hold on. Okay, talk away while I just...
Okay, so now I can't talk away because you took the slide away. Oh okay, I'll pull it up on my email. I don't see anything I can talk to right now.
Okay, well, how was your week?
Good week, yeah. Some showings, got an offer accepted on a new construction, and got some new clients that are starting to get more active. I've got a listing meeting this afternoon, and I'm making a nice dinner tonight for my lady. And happy Valentine's Day to everybody, by the way.
Happy Valentine's Day.
Yeah.
We had a family dinner last night. It was lovely. It was, we don't get to eat together very much anymore. And I submitted an offer last night for a property that is going to receive offers today. And I've got a listing on Gorge. We're looking at offers tomorrow. Mm-hmm. So I decided not to make it on Monday because of Valentine's Day.
Yeah, it's a silly day to have offers, I gotta say. Although there's another one that I've got clients looking at. They were thinking about writing, they didn't, but they're looking at offers at 2, the sellers are.
Okay.
Yeah.
All right.
Stats yet, or do I go from my email?
No, we're gonna show it the old-fashioned way because for some reason I cannot do it. So anyway, that's okay. Let me just try one more time here. It's uploading.
How are you finding it out there in general?
In general?
Yeah.
Pretty good. I'm going to share the screen. I'm finding it a bit, what's the word? Low on inventory, and that's what we're going to talk about today. Okay.
Yeah, absolutely. We've got some stats today from BC Real Estate Association as well as for all of BC. So I'll dive into this then. We've got new listings, 188 in the last week. whereas 180 went pending. So pretty much even for new listings versus pending. So that's not going to be helping our inventory increase at any point. We've got 19 price decreases and 14 price increases. So again, fairly even there. No properties came back on market after coming off. 81 transacted as sold, 8 expired, and 4 were withdrawn by the seller.
Yeah, so I actually got a call from a realtor whose listing expired to tell me there was more flexibility. This is after I told her that my clients were interested about a month ago, but I felt it was listed too high. So you can list too high in this market, and that happens. They were expecting the market to go up, and yes, we are low in inventory and prices are going up, but it doesn't mean you can ask more. It means ask reasonably.
Yeah. There's also people with so I had a situation, the situation sort of overgone the last few weeks, where I had a client interested in a property that was listed. They went to offer day and they were the only person at the table on offer day. And so, if you're the only person at the table on offer day and it's a nice property, but not a great property, we wrote a little bit under asking, assuming that we would get negotiated somewhere, and got a call from the agent, said, no, we're not going to negotiate this. I said,
Did they accept it?
They didn't. No, they didn't respond at all. I said, well, so you wouldn't even counter us at full asking? Like, are you just not interested in selling this? And he said, no, we were expecting more action, and we thought it would go above asking, and my clients have something that they need to achieve. So, they said, we're going to just take it off market and relist it. So I said, okay, I understand. Sorry.
I think I know the property.
Yeah. So it relisted, and I thought that they would relist at their expected price, because that would be the thing you'd normally do. But they actually listed, oh God, 75,000 under the last price that they had listed at, which we looked at and said, well, what are they thinking? And what they were thinking, of course, is that they were going to generate multiple offers and get a bunch of buzz and maybe get the activity they were hoping for, so they could then achieve the price they were hoping to achieve. But of course, once again, they didn't achieve that price, and they took the property off market. So there's an example of properties coming off market, properties being both overpriced and underpriced at the same time, and people, choosing not to sell in this market.
Well, I just want to say another property was listed at a certain price. They didn't get offers. Then they relisted it. They actually raised the price 25,000.
Mm-hmm.
So, there's different strategies, and you really have to go with a realtor who matches your strategy. I recently talked to some sellers, and I suggested listing at this price, and it was listed at this price and by another agent. And, that was the choice of the sellers. I've been watching it. It hasn't gotten a lot of viewings, but we'll see whether or not, kudos to them if they get over asking.
Mm-hmm.
But I think asking high right now is not a great strategy.
No, so one of the things that buyers have even sort of said anecdotally, and some sellers may not understand, is that with buyers almost expecting everything going to go over asking, when they see a price of, let's say, $1 million, they expect it's going to go for 1.2. When they see a price at 1.2, they expect it's going to go for 1.4. A house that may actually sell for 1.2, listed for 1.2, may have some buyers assume that the seller is expecting more money and just not go for it. It's a funny situation in the marketplace right now.
Well, I got a text actually from somebody who was interested in that property, and they said that exact same thing. Are they expecting this to go over asking?
Mm-hmm.
Price high, and it needs blah 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 blah.
Mm-hmm.
I was like, okay, I've got to keep this text. Anyway, let's go to next slide.
Yep, that's your turn.
Okay, so for February 2022, we're looking at 130 net unconditional sales. So they've gone pending compared to 863 for February last year. Now, note that we're recording what's happening as is. The 863 last year is all the sold, so completed sales.
I got to point out one thing that I'm seeing here. This date shows February 7th, 2022 for those stats. So Jane, I think we're a week out.
I've got it. 313. I just picked what happened was the wrong slide. They're both wrong. So 188 to 180. That was right. That's what you said. Price decreases 18. Price increases 14. No back on market sold 81.
Yeah, I read from the right one. And somehow this whole slide changed when you did something here.
Oh, God. Anyway, because maybe I have the wrong, I don't know. Now I'm all flustered. Okay, so 313 net unconditional sales compared to 863 last year so far to date this month, and new listings 434 compared to 1,015 February 2021, and active listings. So we're low. 803 compared to 1318. Let's just go to the next slide.
Yeah, let's just move on really quickly.
Okay, I see what's happening. I've got the wrong
deck.
There we go. All right. Next. I'm shaking my head. So that's the right data right there.
Yeah.
All right.
Screenshot that quick, folks. We've been through that one, and now this is from. Okay, this is not the BC. Oh, this is the BCREA data that we were showing this morning. So this is interesting because this shows, how many active listings there are on market in BC itself, and the yellowish line there shows estimated active listings needed for long-term balance. So
40,000.
Just under 40,000, yeah. So we have been under that number since 2016. And we almost got back to balance in late 2019. And since then, we are way out of balance here in 2022.
It's funny because I remember talking to somebody, we were doing an interview, and she asked me in 2019 what's happening with the market. And I said, oh, it's fairly balanced. And then, of course, COVID hit, and you can see just went crazy.
Do you think, though, if COVID hadn't hit, where would we be today? It's an interesting question because COVID did spur a lot of buyer activity, I think, in terms of people changing what they are looking for in homes and so forth. It also put money it took money out of the economy, but put money into the economy because of government assistance. Where do you think we'd be today if it wasn't for COVID?
Well, I think a lot of people didn't spend money as well. So, Jen can talk to it. We have Jen Lowe today. Mm-hmm. She can talk to the fact that people probably had more money in their pocket. Maybe there's stats around that. But what happened across the province we're seeing is up 23.5%. And that's very similar to what happened in Victoria. So they are anticipating that sales activity will be strong.
And we're not alone here, folks. Victoria actually has been one of the strongest markets. It's gone up in house price, and activity. But we're not alone. BC, the entire country, but BC is what we're looking at has been quite active.
Alrighty, so
and I'm going to say too, we're going to look at some stats, and it's going to say sales are down over last year and sales are down over the year before. And normally when you see that, you think the market is dead in the water, but sales are only down because we have less properties to sell. If you only have so many properties to sell, only properties can sell, and our numbers go down. But the supply demand means with those low properties, prices are still going up and will continue to do so. We've got a long way before we get back to balance.
Okay, so let's bring Jen on and we can talk about all of this. So good morning, Jen. How are you?
I'm great. How are you?
Good. So do you want to talk about what's happening from your perspective in the market?
Yeah. So you were talking a little bit with COVID and the changes. I'm finding, or what we notice is a lot of people are changing their living arrangements because their work-life balance has changed. They no longer need to live in town. So then they are moving out in the country, or they're moving home. They've saved money. They've saved the down payment that they've been, looking to save. It's definitely created that flurry of activity, where we're in a situation where we've got lots of people wanting to move, but not enough supply to make that happen.
Right. And I think also what it doesn't take into account, looking at the forecast, is the net influx of people moving to BC from other provinces. So they look at that 40,000 sales activity or whatever, how many listings we need to maintain. But I'm thinking, okay, you know what? That's not the number needs to fluctuate with the population.
I'm working with a lot of people who want to influx from other provinces right now.
Yeah.
Yeah.
So what's happening? What's this chart that we're looking at here? Which
what I was excited to talk about is what's been consuming my world in the last sort of 6 weeks or so. Middle of January, all over the media is rates are going up. Rates are going up. Panic. Lock your mortgage rate in, because rates are going to skyrocket this year. So that created a lot of clients' concerns about interest rates and what does this mean for me. So lots of clients are I quite often will recommend, depending on individual circumstances, of course, but will recommend going with a variable rate mortgage versus a fixed. The difference between the two, a fixed rate mortgage, you've got your payment is set for a 1 to 5 year term, and your interest rate stays the same over the term. With a variable rate mortgage, your interest rate will fluctuate over the 5 year term that you're set in. So I just thought we could take a look at what the actual numbers are, because I found that this particular chart has put a lot of my clients' minds at ease after hearing what the media has to say, than when we look at the actual numbers. Yes?
Okay, so I just want to say, a lot of people like fixed rate because they think, okay, I know what the payments are going to be, and it definitely attracts a certain personality who thinks they don't like risk.
It insures against, if rates did really, really spike, it insures against that unknown. But as Jen, I'm sure, is going to tell us, that the risk is really, really low of that actual eventuality happening. And the math doesn't add up because fixed rates tend to be higher.
Yes, you are paying a huge premium to have that peace of mind of knowing what your payment will be for 5 years. So in this example here, what I've got here is a mortgage amount, which is about the average right now for someone, first-time home buyers looking to purchase a single-family home. I put the mortgage amount at $650,000. If you were to go with a 5 year fixed rate, your payment would be just $3,040 a month. If you were to go with the variable rate, your payment would be $2,552. So per month, we have a difference of $486.
Right.
So Roy is saying he did a split. I'm just wondering what that means.
There's different lenders that offer the ability. There's different types of variable rate mortgage. You can have a capped variable, right? Or if you have, depending on, most of mine is variable, he says, you can do part in a fixed and part in a variable rate. So you're getting a little bit of the best of both worlds.
Right.
So similar to investing, that word dollar cost averaging, right?
Right.
Is what Roy's doing there, is protecting himself with both.
Now,
okay, so go ahead.
Looking at this, the left side versus the right side. On the left side, it's the fixed rate. On the right side, it's the variable rate. And there's that the $400 difference per month.
Mm-hmm.
Now, so rates would have to come up X% for that to make a difference. And of course, if that happens at the end of the term versus the beginning of the term, it makes a difference as well. If they stay low for most of the term, you're going to be doing better. But I guess I'm curious about, if you chose to go with a variable but pretended it was a fixed in the sense that you paid the extra $400 a month,
where does that leave you?
Wouldn't that leave you in a much better place in terms of paying down your mortgage? So if rates did spike up, you're actually lower.
Yes. And what I did with this one, the sort of the second piece is in considering that we are in an increasing interest rate environment, let's assume that rates go up over just around 1% over the next 4 years in your term. Would you be better off to go with a fixed versus a variable?
So Roy is saying the Canadian government has too much debt for Bank of Canada to increase the interest rates.
Well, it'll be interesting to see what happens in March. There's two things that's going to be interesting is that the reason why they didn't raise, or one of the main reasons why they didn't raise rates end of January, is because of the unemployment is very high. So they stalled it. Now the employment report doesn't come out until March 11th. So it will be interesting to see if they stall it again. Now, just taking a step back, what this does in the media, and where I wanted to touch on that, is that the media just puts this fear that rates are going up. They reach out to bank economists, lock in your rate. So unfortunately, clients do lock in their interest rate, and now the bank has you. Guaranteed 5-year fixed.
So Roy is saying, sorry, I said that wrong. I think they'll get 1% higher, but then they'll have to stop them then. And I just want to say, there's lots of consequences here if people do increase the rates, because everybody who is currently in a mortgage will have to then maybe when they come to refinance, they'll be in a different financial position. So I can see foreclosure happening if people aren't able to then adapt to the new rates. And is this something that the economists look at?
Yes, 100%. And the biggest piece, sorry, I got distracted there. The biggest piece is that employment rates and how that's affecting, that seems to be the big standoff for when they're going to increase the overnight lending rate, which then creates the major banks to follow suit with increasing their prime rate.
So did the Royal Bank change their lending rate?
Not that I know of, no.
Okay. One of my friends said that. I didn't verify it, but I'm thinking, banks, do they always follow what the Bank of Canada is? No. Okay. So how do they manage that?
Well, just for an example, TD, Canada Trust, their mortgage prime rate is 0.15% higher than the other major banks. So what they do, or something to consider, and that's why having a mortgage broker looking at all these unbiases is great, is that when you see an advertisement that their variable rate mortgage is prime minus 1.2, but in the fine print, it's TD prime is 0.15% higher than everyone else's prime. So it looks like their variable rate mortgage is actually lower than some of the other major banks, when in fact it's the same.
Yeah, and so the other thing is the penalty. So if you go fixed versus variable and you're in a fixed rate, they look at the interest rate differential.
Right.
So
So
Um,
clients are paying a premium to have that peace of mind, right? By going with a fixed rate. And then if they get out of their mortgage early, and the statistics do show that the majority of Canadians get out at 3.8 years, make either, there's a life event change, or they need to refinance or renovate, or pay off debts, what have you. They need to get out of their mortgage. And when you're in a fixed rate mortgage, your penalty is thousands more than a variable rate mortgage.
so over the past 2 years, did you refinance people over and over again?
Yes. A few people. Yes. It's something that it takes time for that education, and you don't want to say, I told you so. People pay the penalty, and then hopefully this time they listen, and then they go with the variable rate, and then they're much happier in 2 years when they do need to refinance again. And because the reality is people have established a lot of equity in their homes with this increase in the property values.
You might almost want to, when people are considering a fixed versus a variable, and with the variable, if they change their rates, it's going to be based on the current rates. Change their mortgage, it's going to be based on current rates. The bank isn't losing any anticipated income in the sense of a future income from what they had applied. Whereas the fixed rate, they kind of got a higher expected rate of return. And so there's a cost to you for changing. And so when you're calculating the risk of, fixed versus variable, you almost need to incorporate the fact that there's a 60% chance you're going to change your mortgage within the term. And so it's going to cost you an extra $10 or $15 or $20,000 on top of what you thought on top of what you're paying extra in interest.
Exactly.
So I'm just looking at this chart, the prime rate history chart. It peaked around 2008, and then we went down 2009. We slowly went up, and then we've come back down. I'm just wondering, what do you anticipate? Is it going to stay level then?
It's going to, we have to see how the effects of the unemployment and Omicron. Once the economy starts recovering from that, yes, rates are going to increase. My thought, I'm not an economist, but my educated guess is that we're looking at a 0.25% increase in April, not in March. It will be end of April. And what that means for someone with a $650,000 mortgage that is in a variable rate will be an increase to their payment of about $70 a month.
Now, doesn't the Bank of Canada have a requirement to try to keep inflation at a certain point? And if inflation spikes, won't they be forced to raise interest rates?
Yes. That's where we're at. I gather, they're looking to sell off a bunch of government bonds to help with the inflation as well.
Okay, so they've got other mechanisms rather than just raising rates in order to try to control inflation. Okay.
Because the reality in looking at the prime rate chart there, the reality is it takes a long time, or historically, it takes a long time for rates to rise a significant amount, because they have to see the effect. Mm-hmm. And they don't want people turning in the keys to their home and panicking, and right. That's not the effect that they want. So it takes years for rates to go up. Right.
It's kind of like I use the analogy of the big tanker ships going across the Pacific, and if they want to change their course and they make a course correction, it takes a long time before you see that correction happen. They turn the wheel, and then it doesn't actually start to turn for quite some time because of the momentum they already have. And then if they want to correct after that again, they have to wait again. So any change you make, you have to wait to see what effect it has before you make another change.
Exactly. And the last change we had, it went down to 2.45, which is where it is right now. And that was in April 2020.
Right.
So,
Jen, could you explain this chart we're seeing right now, please?
what are we looking at here? So this is in looking at specifically based on a $650,000 mortgage. It's a little bit hard to see there, but the fixed, you'd be paying the $3,039 a month.
What
color?
Which is the red.
Okay.
So the red is the amount of interest that you're paying. This might be a little bit confusing to see.
Okay, so
focus
is
on
this
the top.
60 years? No, 60 payments, so 5 years.
5 years. The amount of interest and principal that you're paying is the red and the blue.
Right.
And the green and the purple is the principal and interest that you're paying with a variable. So it's just confirming that you're saving the net savings based on a $650,000 mortgage going with the variable rate with 4 increases to prime rate over the term. You're saving $25,000.
Right.
Which is at the bottom.
Even takes into account those four changes. That's what those bumps are.
Right.
And you're still quite
Yes.
much better off than going with fixed.
Exactly.
Yeah.
You
Okay.
can. Oh, sorry. Go ahead.
So you would start out at a lower interest rate, and despite the rate being the same, I could kick myself for signing a fixed
Yes.
a few years ago.
That was at that one time, though, Jane, where the variable rate was actually higher than the fixed. So it was a mind game, right? Because the history and the statistics show that variable is always been the better way to go. But that was that one time period where you go, but just a minute, but the fixed is lower than the variable. Why would I go variable? But then it's like, shoot, yes. It's always been the better way to go based on history.
Okay,
Yeah.
So I have a question. On a 5-year mortgage for $650,000, what's the penalty if you opt out?
It would be a 3-month interest penalty.
On variable.
On the variable rate. Yeah. So your penalty, I would say, would be about $3,000.
And on fixed?
You'd be looking at probably $22,000 to $23,000.
Hello.
Yeah.
Okay, I'm taking
And
this.
it's really important, folks, if you have a mortgage and you're looking to sell your home and you're on a fixed rate, that you find out what that penalty could be. If you're planning to buy something else afterwards, you'll probably be able to forego the penalty, but understand what the requirements are. You have to maybe buy within 3 months. Maybe Jen can speak to that, but understand what the parameters are and what the costs are of having that fixed term if you're buying or if you're selling.
Well, and I have to admit, I bought my forever home like 3 times.
Yeah.
Right. So, yes.
Yeah. So the banks push fixed rate because.
Well, they have the statistics too. They know that most people get out of their mortgage or have a life event, move, whatever, at 3.8 years. And it's sold on having that peace of mind and the fear of interest rates rising.
So it's a more profitable product for them to sell.
100%. Yeah.
On average, it causes them to actually make more money on their percentages. Yeah.
Yeah.
Okay.
I just say the role of the mortgage broker is an advocate for you. I always tell people that they're trying to help you get the mortgage. We're not going to encourage you to spend more than you can afford, and we want to find what works for you. Would that be a great way to describe how
Yes.
you?
I am unbiased, and it's no cost to use the service of a mortgage broker. As how I get paid is I get paid a commission for wherever we end up placing the mortgage.
Yeah. And I find that, people like Jen, people like Jane and I, who have, and most commission-based salespeople who have a long-term vision for their career, want to have clients come back to them, want to give them the best advice, want to help clients to succeed financially so that they are in a position that they can then come back to us and say, I'm ready to make another move. But they've done it because we've given them good advice in the past and they've profited from it. And so this is where a mortgage broker can give advice where they have a vested interest in your future, your future growth and your financial health. Whereas the service person behind the counter at the bank is just taking an order or trying to fulfill some sort of mandate or quota.
So Roy is saying, I agree. That's great advice. I can't imagine buying higher based on primary house appreciation. Okay. I have been dealing with a spammer in the back here, you guys.
Haven't heard of it.
Pardon?
There's a hammer going on. I didn't hear it.
A spammer.
Spammer. Okay.
Yeah.
Oh, in the background, you've had someone spamming. Okay, gotcha.
Yeah. So I haven't been able to participate. Anyway, thank you so much for coming. Do you have any other questions, Andrew?
Well, I just wanted to comment too. There was a reference to the media, and the media has its place in the world. But I have observed over the last number of years, when it comes to any kind of a large event, or when we insiders in the industry see things happening, what the media gets their teeth into, they are interested in shiny objects. They're interested in the things that that cause you to pay attention and spend some time reading an article or getting emotionally invested in it, so that you spend more time on their product, and then they get their advertising dollars, or they get to sell their product. So there's economy in everything here. And when you're looking at the news, take everything with a grain of salt, because some of these things are inflammatory and they are there in the moment to capture your attention. But a lot of these things work out in the end and are non-issues at the end of the day. So just take everything with a grain of salt. I've got to say, I've tried to take some steps back from media, because I don't find that
it's not always helpful.
Yeah, because it's very inflammatory lately. It's not really helpful. So finding a good source, you are what you eat. So choose good sources of media and really pay attention to what the experts are saying in all the fields as well, like what you're doing today.
Okay. Well, that was an awesome conclusion. It's true, though. Because information right now is iterative, you can dial into sometimes the wrong information. So you just have to be careful.
There's a lot of that going around right now.
Yeah.
And I think, unfortunately, a lot of people right now have been paying attention to misinformation. Okay, Jen, how do we get in touch with you?
Yeah, you can reach me at 250-217-4925 or j.lowe@dominionlending.ca. I'd be happy to answer any questions.
One of my clients loves you. They call you J Lowe. Okay, Andrew, how do we reach you?
I was going to just say, though, Jen has helped myself, my partner, and a number of my clients through the years, and she's great to work with. So you can reach me, Andrew Plank, by calling 250-360-6106, or email me info@andrewplank.com. My website, andrewplank.com, has a number of resources, as well as a great video that explains what it's like to work with me. And I expect now that I'll start getting some spam.
And if you want to work with me, my name is Jane Johnston. I'm with the Briar Hill Group. My number is 250-744-0775. You can reach me at briarhillgroup@gmail.com. Or you can visit one of my two websites, briarhillgroup.com or vancouverislandtime.com, where you'll find all these videos with Andrew, as well as information on neighborhoods and what's it like to live in Victoria.
All right. We've had Jen on before as well. So if you like these updates on the mortgage stuff, there's some past history of some other shows with this as well. Some with less technical glitches.
Some talking about turtles too.
Oh, God. Yes, that's a classic episode.
It was. I have had more than one person mention that.
All right, you guys, thanks for an informative day, and we'll see you next Monday. We're here every Monday morning at 10 a.m., so please tune in on Facebook or YouTube.
Great.
Take care.
Thanks for having me.
Everybody. Nice to see you,
Bye.
Jen. Bye, everybody. Have a great day.
Bye.